Hello. Hi everyone. You are welcome. My name is Stephen Mchirule. I'm here to give you a brief on CPA Taxation Paper 6 and Advanced Taxation Paper 9. Guys, these are very interesting papers because preparation for them is reflective of your knowledge you have got from the tax laws. So, in general, in the generosity, what are the topics I would like to draw to your attention? We need to know the meaning of tax. Who is a taxable person? A taxable person, that will be a person who is going to pay the tax. So this person is registered for the tax. Okay, then we have other concepts like chargeable income. Chargeable income is gross income minus allowable expenses or deductions. The deductions, the expenses, or all that may mean the same thing for purposes of tax. Now, Section 17 of the Income Tax Act provides for gross income, and gross income is the total of employment income, property income, and business income. Now, the same section also provides that residents are going to be taxed on incomes from all geographical sources. That is Section 17, subsection 2. Income of residents would be subject to tax, that is from all geographical sources. Then, the other concept, which is similar for us to know, are the key topics which are going to be examined in these both papers. We have business income, we have employment income, VAT, customs and international taxation. And then we have issues to do with tax planning and current issues, ethical issues in the tax environment. Well, when you talk of business income, we are looking at the components of a business income. It could be revenue from trading stock or sale of assets. Now, the matter and contention here is what are those components which appear as business income, but they are not part of business income for tax purposes? Well, I know that many of you have heard about profits when you sell assets. For example, if you sell an asset for tax purposes, the first question would be, is it a business asset? Is it a depreciable asset? If it is a business asset, this is an asset which is used or it is held ready for use by a taxable person in the business. The production of income included in gross income could be an asset of a partnership, it could be that one of a company. Now, that profit you would get from selling such an asset would then be still part of your business income. What if you have sold an asset which is referred to as a depreciable asset? That is plant or machinery, equipment, the act refer to it as similar article which is used in the business, wholly used in the business, or partly used in the business, or held ready for use in the business. In the production of income, including gross income, and which is likely to lose value due to wear and tear or obsolescence. So the distinctive feature here between a business asset and a depreciable asset, the business asset is held for use, is used or held ready for use in the business. The production of income, including gross income. Whereas the depreciable asset, we are saying this asset is likely to lose value due to wear and tear or obsolescence. Now, the profit you would get from selling such an asset, which is a depreciable asset, would then be exempt from tax. That means gain on the disposal of a depreciable asset will always be deducted from the incomes, because we are saying it is exempt from tax. When we talk about chargeable income, we are looking at all the incomes of this business less the allowable expenses. Now, the expenses to be allowed for tax purposes, these expenses must have been incurred in generating income, which is included in gross income. If these expenses are not incurred in that respect, then they would not qualify. That is under section 22 subsection 2 of the Income Tax Act, which disqualifies the categories of expenses that are permitted as allowable deductions for income tax purposes. Well, what are some of these expenses which are not going to be permitted? Expenses of private or domestic nature. Okay. That expense would definitely not be allowed. For today, we are ending here. Catch you tomorrow, same time, to expand more on expenses of deriving business income and the specific allowable deductions under the Income Tax Act. Particularly, I'll bias at capital allowances. What are the capital allowances? We shall be looking at the wear and tear, commonly known as wear and tear, which is depreciation of assets. So that is tax depreciation. We shall look at industrial building allowance. We shall look at initial allowance. We shall look at minor capital equipment allowance. Then maybe we can also look at farm works. We are going to look at cost of intangible assets, and we might, if we time allows, then we may conclude business income and start on employment income. Thank you so much for listening to me. See you tomorrow.